Hello and welcome to another episode of the Coreco Couch. Now, this time on the couch with me, we really do have the very wonderful mortgage luminary. There you go, you're a mortgage luminary.
What an accolade, that's going straight on my LinkedIn.
Rachael Hunnisett. Now, Rachael began in the mortgage industry as a mortgage broker, then joined Skipton Building Society's business development manager before becoming their national accounts and new build lead. She then joined the Green Revolution as an associate director of the Green Finance Institute before finally joining the new lender, April Mortgages, as director of mortgage distribution in September 2024. Welcome to the Coreco Couch.
Thank you very much. As a super fan, it's lovely to be here. The studio does exist. I'm not dreaming.
You are our super fan.
It's great to be here. Thank you for having me.
And so you have watched all of these, but the only reason you watched all of these is because you told me you were locked out of your house. Is that correct?
I would have watched them anyway. Brilliant. Yes, I locked myself out of my house and thought, what else do you do when you've got a load of time on a Sunday? You watch Monty,
there
of course.
You go.
That's
there
it.
You go.
Take
so,
heed, everyone.
If you find yourself locked out of your house and you're at a loose end, you can always catch up on the Coreco Couch podcast. So, before we get into what you're doing now, you've had quite a journey in the mortgage market, in financial services as a whole, to get to where you are quite quickly, actually. You're one of the real new stars of the industry. What are the things that you've learned along the way and what has got you to where you are now?
Oh, thank you. All these sound bites are just brilliant for me. For me, I think, like you say, I started out as a broker. I've taken quite a lot of twists and turns along the way. I think just really trusting your gut and knowing, and sometimes you make a decision and it doesn't make sense to anyone outside of you. And then you'd have had these in your career, right? Where people go, what's he doing?
Yeah,
and you're like,
no. Sort of every day. Yeah.
What is he doing? And you've just got a vision and you're like, no, I've got to hold firm to that. Knowing when to hold firm. And none of that's more true really than in my current role when you're in a startup lender and there's lots of different shiny things you can do in a startup, right? Where you're like, could do this or could do that. And you're like, no, what's the big vision here? What are we trying to achieve? And if it doesn't align with that, don't do it. And be really true to kind of those values, those views. Don't shy away from feedback. Sometimes it makes you better, makes you stronger, makes you take on new opinions. But I think knowing where you're going and holding firm to that and shutting out the noise has really been a good stead.
Now you find yourself with this new lender, April Mortgages. Why them, and what are they looking to achieve in the UK mortgage market? What's different?
So I'll start with saying I wasn't supposed to come back to mortgage lending quite so quickly.
Right.
I was very much enjoying my sabbatical on the other side when I was at the GFI, and had a call one day. So go and speak with April. I was like, go just have a coffee. And within 10 minutes, I was like, okay, this is absolutely somewhere I've got to be. So I'm going to almost turn that question around and kind of think, how did we get here? So think about what a mortgage actually is. It's derives from the French, which mort, which means mortality, death, and engage means pledge. So it's a death pledge. So it's something that you decide to either pay off before you die or you die and you pay it off, right? So realistically, it's a long-term loan. We all agree that that's a relatively hopefully long-term finance. And how have we ended up with the market that we've got here in the UK? So traditionally, a little history lesson for everyone listening. Traditionally, most banks, and there'll be lots of different ways you can do that, but a lot of lending goes through 6 lenders. You'll probably know the stats better than I will off the top of your head. I'm primarily retail or wholesale funded. For every mortgage geek out there, you're going to say there's millions of different ways you can be funded, but I'm going to pick one for simplicity for those listening. So imagine, Monty, you've got some money. I'm a bank, and I say I've got an ISA, and I'm going to lend you. And you can put your savings with me. They'll be really safe. I'm going to give you 4% interest on that. I'm going to lend. You're going to lend me that you're going to put that money with me for the next 2 years. So I'll end date that at March 2027. And you think, I love the Bank of Rachael. Bank of Rachel's great. And you tell 19 of your friends, and all of you give me £10,000 each in ISA money with an end date on that return of March 2027. As a lender, I go, brilliant, great. I've got this money. What can I do with it? I think I'm going to lend out a mortgage. So your friend's son wants to buy a home. And let's say they want a £150,000 mortgage. So I keep 25% of that money safe. Again, real basic maths, £50,000 safe is what banks call capital liquidity.
Yeah.
And the rest of it, I'm going to lend out on a mortgage, which is great. And I'm going to charge your mate's son 5.5%. So there's my margin, my 1.5%. Realistically, in that transaction, there's very little risk. Very little risk for the bank. There's very little risk for you. So you've got your ISA. You're protected by me. I've got enough capital liquidity. That means that if you needed to pull your money out, I could give you some. Worst case scenario, you're FSCS protected. So your money's safe, right? Yeah. For me as a lender, I've got guaranteed money in with an end date. I've got guaranteed money out with an end date. I've got guaranteed margin. And my underwriting means I know that there's sub 1% chance of that mortgage going into arrears. But even if it does, I've got security over the property. I can repossess it.
Yeah.
So there's really little risk in that transaction for anyone involved, apart from your mate's son who's got the mortgage. So they've taken on the biggest debt of their life, usually. They've got a guarantee of what the payment will be for the first 2 years. Literally no idea what the payment will be after that. And they've got the running costs of the property, and they've got everything else. And that is a very basic term of how the mortgage market has come to be.
That's really well explained. Yeah, I really like that. Yeah.
So when you kind of get your head around that, and you kind of, and shamefully, it took me 10 years of working in the industry before I went, yeah, actually, there is a lot of risk here for consumers. A lot of risk that we've normalised. So in Europe, they don't have this. Long-term lending is absolutely commonplace. We're just, us in Canada really, are the only real anomalies. But in Europe, they don't have that, and much of the States as well. They much more think about the death pledge being a much longer loan. So you then look at our market and go, well, why are we doing it like that? Why do we have all this short-term finance? Why are we treating long-term loans as if they're short-term finance? And the risk is quite low for the banks, so that's great for them. But equally, the penalties associated with the products in this country don't make long-term lending attractive. So you're an advisor, you'll get this. If I said to you, you put a 10-year, first-time buyer on a 10-year product, you'd be saying, Rach, that's madness. The likelihood of them separating or some life event happening, it's their first ever property. Exactly. Or what would happen if they're buying at 95%, but I know in 10 years' time their loan to value won't be 95%. Why would I lock them in at that high rate? And what April's proposition did was look at this and go, right, let's red pen every possible reason why you wouldn't do a long-term fix. Right, there's ERCs, right, we'll get rid of them from 99.9% of the time.
ERCs, early repayment charges, on a fixed rate if you want to. So if you've got 10-year fixed rate. And that's normally the reason why people wouldn't have gone for it, isn't it? Because of those changes and those penalties.
Yeah.
So you've got rid of those changes.
Yeah, absolutely.
Of those penalties.
Yeah, most of the time. So if you overpay, if you sell off property in the background, inherit money, win the lottery, I'm still hoping, it would only be if the customer chooses to refinance to another lender that would ever charge an ERC. Yeah. So we've red-penned all of the risk elements, which if you choose to remortgage away because the bottom's fallen out the market and it suits you, absolutely fine to do that, but we'll need to charge for that because it affects our bottom line. But for all the genuine flexibility reasons that you might need that, we've taken that away. Same with fixed rates. So you purchase at 95%. By the time you get to 90% loan to value, because you're paying off your mortgage every month, we'll drop the rate. And then you get to the next loan to value banding, and we'll drop the rate again. And we drop the rate at every stage through that. So all of a sudden, all these barriers that we've had historically for longer term lending just don't exist. Complete modernisation of the mortgage market. And I sat in that room last summer with all of the intention of saying, thank you so much for your time. I really enjoyed meeting you. Have a lovely time and good luck with the startup. And went, oh no, I've got to take this job. I've got to. I love it. I absolutely love it. I can really see how it's going to rebalance the mortgage industry in the favour of the consumer, give brokers the tools they need to be able to have proper conversations about long-term where they haven't been able to before because the products just haven't been there, and really help a lot of people. So that for me is the kind of why. The cherry on the cake is that because of the security of longer-term lending, we're able to lend a bit more. And something I'm incredibly passionate about is helping more people get into homes, not just those. We've seen great innovation in our industry for years around Bank of Mum and Dad and lots of products that kind of use family wealth. But I guess I'm from a family that didn't have family wealth. And for me, it's how do I help more people like me get on the ladder? Yeah. How do I help more people that don't have rich family they can lean on or family with assets, they can refinance. How do we help everyone who's got a dream of owning a home get into home ownership? And for me, that's being able to lend more money to the people that need it. So I'm incredibly proud to say that April lent 25% more than other lenders on the market. We've benchmarked that in hundreds of different scenarios and consistently lend more. So for me, the safety element of the longer term and keeping customers in their homes for the long term, combined with being able to give them the tools to actually buy the home they want. Yeah, you can see how I ended up here.
Yeah, yeah, that's really interesting. So breaking that down as an advisor, normally when I'm talking about, okay, you've got 2-year fix, you've got 5-year fix, there are 10-year fixes, there might be the odd 15-year fix. The problem is they're not flexible. And I've always said, whenever I've been asked by journalists or whoever, why don't you sell more 10-year fixes? What's the problem? Well, the problem is that the UK market is all about, it is quite short term, and it has been short term for years and years and years. And that big reason for the penalties is because people aren't sure of what's going to happen in the next 2 years. They might they're not really sure what's going to happen in 5 years, but they're happy to take that penalty risk or pay that little bit extra for an insurance policy, if you look at it that way. But when you start talking to them about 10, 15 years and there's tie-ins, they're just not interested. So when you guys came along, it was a real breath of fresh air, because you really did look at, let's remove that then. If there's a lifestyle change, let's take that barrier away so you can start having that real conversation. The extra bit you've put in about reducing the product as your loan to value goes down, the amount of equity you have in your property, that's another really big plus. And that giving you that opportunity to lend up to 6 times income as well is really interesting. So do you think, so with all that in mind, do you think you are going to change or help change the perception around long-term fixes in the UK?
Yes.
And do you feel like you're making inroads already?
Yeah, absolutely. I came to change the UK mortgage market. That's what attracted me to April, and I genuinely believe it's a market that needs disrupting. It's not for the faint-hearted, because you're changing the cultural mindset of so many.
It's a massive cultural change, isn't it?
And you spend some time. Our parent company is in the Netherlands, and you spend some time out in our office over there, and they're baffled by the fact that we'll be sat in the pub and say, "Oh yeah, I'm on a 3.8%, and you're on a," and we all just talk about our rates like it's culturally the British are so comfortable talking about that kind of thing. Well, you just don't really see it abroad. And I said I went with all of the questions. I really interrogated the product design before I went, because I thought if I'm going to stand on stage and advocate this product, I've got to really believe in it. It's such a different thing to the market. And I say to them, well, why do you want to fix long then? Because I like to sleep at night. That genuinely was the answer I got when I spoke to some of my Dutch colleagues. It's not for the faint-hearted. There's a lot of perception to change, and equally, our Dutch business is built the same. We're incredibly intermediary focused. So mortgage brokers are the lifeblood of the business. We don't have a direct proposition. We can only do this in partnership with brokers. So it's helping brokers to have the conversation. And a small plug for you. You were one of the first firms on our panel. We're really early adopter of really understanding how this can support customers. But
you ticked all my boxes.
Thanks.
as to why, as I said before, why don't you sell more longer term? Because people don't want it because of this, and this.
That's it.
And then that first meeting was really interesting when they went, "Yeah, we've taken that way. Yeah, we've taken that way." It's like, oh wow,
don't have a reason
that's
anymore.
Really,
yeah.
But it's still. I do use that insurance policy part because it is slightly more expensive than looking at obviously a 2 or a 5 year money at a 5-year product at the moment. But it does give that long-term security, doesn't it?
It comes back to the question of what's the value of peace of mind, right?
Yeah.
What's that worth to you? So if you're the kind of person who regularly jumps amber lights or leaves the front door of your house unlocked, which I really wish I did, then then yeah, probably peace of mind isn't for you, right? Maybe you're a risk taker. If you walk into the casino, chuck it all on black, probably not our target customer. But if you've ever bought insurance or ever gone, do you know what, I'm not going to buy the basic insurance, I'm going to buy the one tier up because I value the peace of mind that gives me. If you're thinking about how can I take take a bit less risk in my life and focus on what the other things that do add value to my life, it's that kind of conversation. So an example I was looking at the other day, if you look at our blended rate, which was, I won't get into rates because I'll never get through FinProm sign-off. So I'm going to talk very vaguely about rates, but we were, our 10-year versus the other 10-year on the market, if you look at the blended rate, was £12 a month difference on this example I was looking at. If I said to every customer that took a 10-year standard product that wasn't an April product, for £12 a month, you can have an insurance policy that guarantees that if you want to overpay your mortgage by more than the standard 10%, if you want to overpay by 50% because you inherit money or whatever goes on in the background, or you split up with your partner, life circumstances change, you have to move, you hate your neighbours, you decide to relocate to Spain, any of these reasons, this £12 a month insurance policy will pay out and when you never pay an ERC. Pretty sure most people would take it. And it's thinking about it more holistically. So the journey, the challenge I've got or we've got as a lender is bringing brokers on that journey to have those conversations the same way that you do with life insurance around what really is your plan, where's your life going, and how can we find a product that uniquely suits your needs specifically. So we talk a lot about what's the value of peace of mind, and for us that's what it is.
Absolutely. Now, obviously, we've had loads of talk from governments over the past of both sides of the house around. Yeah, we need everyone to move to 25-year fixed mortgages. That's going to, save everything, save the housing market. Do you think it is a bit of a panacea, or actually is that just totally overblown? But what's the wider view, and how can it help?
Difficult question given how close my previous role was to government. I have to be conscious to my colleagues that. I think it's really easy in a soundbite to oversimplify how complex the mortgage market is.
Yeah.
Much of the UK economy is underpinned by UK housing. We've seen that because we've seen things like, most recent example would be COVID and the stamp duty deadline, because when things start to dry up in the housing market, it's not just the housing market that dries up, it's the moving vans, it's the moving companies, it's the DIY stores,
exactly,
it's the centre of this massive ecosystem. So much of the wealth in our country is underpinned by property. The common misconceptions when we look at the property market and mortgages is that less than half properties in the UK are actually mortgaged, which I think if you work in our environment can sometimes feel really low, but there is a lot of properties owned outright out there.
Yeah.
Do I think that long-term lending provides a level of security which I think consumers need? Yes. I kind of come back to this example of, some of your audience might be limited company directors. Let's say you're a limited company director and I said to you, I'll lend you 5 times your pre-tax turnover, or even 6 times your pre-tax turnover. I'll guarantee the payment for the first 2 years. After then, it could be anyone's guess what your payment will be. I've really got no idea. Not many businesses would take that level of risk on without a solid mitigation plan. Not many of them would go, yeah, I'm up for that. Great. They'd go, well, hang on a minute. If that goes horribly wrong and my sales forecast don't cover enough to bring that in, that's the same as your salary, right? Your pre-tax turnover. And then what you're bringing in. So do I think there's absolute room for the market to move towards longer term? Yes. Otherwise, I wouldn't be doing what I'm doing. But not under traditional guise. If you said, I'm going to put everyone on a 25-year fixed and have an ERC that sits alongside that the whole way, I'd feel really uncomfortable about that, because, life changes. Life has twists and turns and things you could never foresee. I mean, I think I've said to both of us, we won't get too into personal stuff on the podcast. That's maybe podcast number 2. But, if I said 5 years ago, would I be where I am now?
Yeah.
Career, life, love, kids, all of it. No, I would never have guessed any of it. Yeah. So there's an element of who knows what's around the corner, which also works when it comes to rates. I mean, goodness knows, 5 years' time we'll be at the back of another election. Will Trump still be in office? All these things, right, that we've got that are going on in this matter. I'm not going to talk about what's going on politically today, because by the time this comes out, there'll be something new. But, I
think Trump can be in office forever if he has his way.
We'll see. But the thing is, if I said to you, Monty, tell me what the headlines are going to read next week, we probably got less time now, less certainty now than we've ever had before with things like that. So to gamble your entire mortgage, the biggest debt of your life, on what you think the market might do in 5 years seems completely nuts to me.
very interesting, isn't it? It's such a different way of looking at it. I think the reality from a broker point of view is just being able now to actually have a proper conversation where everything that, as I say, that was thrown at you in the past meant you probably couldn't. It felt hard to recommend something like that. Now there's no reason not to, and not to have that proper discussion, which is actually, as a broker, that's all you want to have.
Yeah.
And as a member of the public looking at mortgages, you want to know all your options, don't you?
You do. Yeah.
So
and also
really
what we haven't been conditioned to think is true, right? You're all a product of environment. And if all you've ever known is 2-year fixed, it's a massive change of mindset. So yeah, if you take everything you know about mortgages, pop it in a little box and start again from scratch and think, realistically, if I had to start again, what would I design? I don't think we'd come up with the system that we've got now.
No, you're probably right.
So how can we start with, really at the heart of it, what does a customer really need in order to just get their mortgage, get on with their life, make it work as a tool for them, make it easy for them to draw funds out midterm, make it easy for them to do it, make it easy for them to look at their mortgage statement and go, oh, if I pay another £1,000 off this month, that gets me to the next loan to value banding. Brilliant. How can they feel empowered to pay as little interest as possible, because they're now in control, they're in the driver's seat, and that really excites me.
So how can people access these products?
So as I said, we're a startup, so we're still quite small in size. We have quite a limited panel. We only touch about 10 to 15% of the UK mortgage market. We are on panel with Coreco, as I mentioned. You were one of the first firms on, and we've been really grateful for that collaboration all the way through. So the best way for customers looking is to have a look on our website. You've got a list of all of the advisors on our website there. You won't find us on the high street. We don't take direct business. If you phone us up, we'll point you in the right direction. We'll point you in the direction of advisor. But we really, really believe, particularly now, probably more than ever, which we've seen in market share growing in favour of the intermediary, we really believe that mortgages are something that you need to sit down and have a proper conversation with, or have a good conversation over the phone with, or however you do your advice, to really speak to a professional and take that steer. Someone that's not going to just going on a search comparison tool and saying that's what I want. I really believe in sitting down and going, this is my life ambition. This is what I'm trying to achieve here. Help me finance that through the best way I can. And for me, the only way to do that is through a qualified mortgage advisor.
There you go. Thank you for that. Shock horror, qualified mortgage advisor agrees with you. So long-term mortgages, April, tick, like that. That's very well explained. And the market now has some proper choice, which is what we all wanted. But I want to go back a little bit to your time, if you can remember, many months ago, the Green Finance Institute. Because obviously the whole green agenda was massive, and then it stopped under the last government, and now it's probably going to be massive again. What from your time and your perception now, do you feel that public perception and understanding of green mortgages and the need to be more energy efficient generally is filtering through, or do you think there's still a big gap there?
So it's interesting you say it's massive. It's a shame this isn't live, because this is a moment where if we were on a panel debate, I'd be saying put your hands up as a consumer you felt it was massive, because I really don't know if I think in our mortgage industry echo chamber it's been given rightly so a lot of attention, and still there's such a long way to go. It's hugely important that we get this right for a number of reasons. We need to make sure that we improve the housing stock. We have the oldest housing stock in Europe, incredibly leaky houses. And by leaky houses, what do I mean by that? I mean heat escapes, double glazing that's not up to standard, insulation that's not up to standard, etc. It needs to be done in my opinion, it needs to be done hand in hand with government. We need to be really clear on what the government parameters are. For kind of two reasons. Consumers need to know what they're doing. You only need to look at disasters like the spray foam scandal, which I won't go into for purposes of the podcast, but for anyone listening that hasn't come across that, it's only a Google search and a click away. To also making sure that we don't accidentally, I've spoken a little bit before about how many properties aren't mortgaged, how much wealth in this country is tied into properties. It's a very British thing to want to own your castle. And if we move too quickly in the wrong direction, we risk devaluing stock, which has a massive negative impact. But also, what was something I was really conscious of when I was working at the GFI with lenders to help them on their long-term planning. So it's kind of medium and long-term planning I was working on. Is sometimes, intergenerational wealth is a huge source of finance for our industry. So you're stopping deposits being pulled out of properties. But also, if we then see, so landlords is a classic example of this. We've seen lots of changes. Maybe not around EPCs. We've seen a bit of dancing on that. But if landlords are to offload stock of lower quality, who's going to buy those houses?
Yeah, correct.
And the reality is that will probably be first-time buyers that don't have the education to understand that they're buying something that potentially, I'm not going to say potentially is worth less in the future or just needs a lot of investment in it to keep it up to scratch. So I was on I will say it. Why not? I'm on the Coreco Couch. It's a place of honesty.
You can say what you want.
I was lucky enough to be on stage about 2 years ago next to someone who said, well, we might just stop lending on anything EPCD or below. And I actually had an allergic reaction to him on stage.
So it's important to point out energy performance certificate.
Yes.
Yeah. So the energy rating of your home.
Yeah. So I feel really strongly that lenders should be working together with homeowners to help them understand their home, help them understand where that. I mean, you want to save on your electric just because it saves you money and your gas and all of that stuff. Yeah. But to put together a plan, there's plenty of companies out there that now offer really good plans that look at that. And, you don't have to pay for huge surveys. There's a lot of fantastic tech disruptors out there doing stuff like that. And start thinking over it in the next kind of 10 to 15 years. If you're going to do renovations to your home, you might as well make your home more thermally efficient at the same time and go on that journey with it. The likelihood is, over time, the word green mortgages will just go, and it will just become a mortgage that has the facility to green up your home. And if there are benefits, which it's most likely to be on the securitization market, so that's for lenders to get basically more consumer answer, cheaper cost of funds. If lenders can get cheaper cost of funds, but the government do something to drive that, maybe a blended capital model, and lenders access cheaper funds, inevitably funds will become cheaper for homeowners that have more energy efficient stock.
Yeah.
So as a homeowner myself, I'm thinking, okay, well, to hedge my bets here, I just want to keep making my home more energy efficient because it's warmer, it's less drafty, it feels nice. Yeah. Also, the reality is when I come to refinance my home, I'm probably going to get the better deals. But it's definitely an evolution, not a revolution. And we've got to be so sensitive. I've sat in rooms where people have been incredibly passionate about linking EPC to value of home, and while that has a lot of positives, it doesn't have positives for the poorest people in communities.
I think that's a real worry of mine, where you have a two-tier housing system where if you've got good energy efficiency, it's worth this, etc. If you've got low energy efficiency, value falls, you have problems selling it, etc. It creates a whole heap of issues, which is why, in my opinion, need more help, more grants from government to help.
Yeah, and also just clear guardrails from government. That would be my calling, is clear, because what the private sector is incredibly good at is coming up with a solution when they think there's an opportunity. Huge track record of doing that. Yeah. When there might be a grant, I was speaking to a friend the other day that said, I might get solar panels, but should I wait a year because there might be another grant? There might be better grants by then because of what was put in the budget. And I think that uncertainty doesn't help. There was they've stopped lending on mortgages. So again, I think probably, I won't say who it was, but there was a lender that traded in more of an adverse space. When you're watching, I know you'll know it's you. And they had a really good plan. And their market was much more people that were down on their luck, a bit of adverse credit, perhaps single parents, people that have just had to rebuild their life again, right? Which is incredibly hard. And they had a product that was more around putting, like, how can we give you £1,000 cash back to put a blanket around your boiler or to put some draft excluder underneath? Make your home a more comfortable place to be first and foremost. Energy saving light bulbs. I won't get too into the detail, but a lot more could be done at that end of the market before we start talking about deep full home retrofits and things like that. So does the green revolution need to happen? Absolutely, without a shadow of a doubt. We can't carry on living in really old housing stock. We've got to modernise our housing stock, but it's really important that we consider all of the negative externalities while we're doing it.
Yeah, I'd agree with that. It's interesting, isn't it? Because I looked at solar panels and I was like, right, definitely this year I'm going to do solar panels, blah, blah, blah. I looked at the cost, 10 to 15 grand, and then looked at the saving and thought, is it really worth it?
Full confession, my house has solar panels, so I can't probably. I should say yes, right? Yes, yeah.
Yeah. So it's interesting, but again, it's a bit like the long-term mortgage debate, isn't it? It's about overcoming mindset.
Yeah.
That actually you're doing it. Yeah, you might think that the savings will be minuscule, but actually in the long term, the savings overall in terms of heating costs, in terms of value of property, in terms of just peace of mind that your property is more energy efficient, could be invaluable.
And saving the planet's a useful benefit.
And of course, you're saving the planet.
That's important. There'll always be these kind of different cohorts of people between, I feel really motivated by the climate, or on the other hand, I just want to watch the world burn and save me some money type. And there should be a product offering for everyone and everything in between. When it comes to green finance, there should be a way of taking these customers on a journey of, hey, that's so corporate, sorry. Taking customers on a skippity adventure through how do they...
I like skippity adventure.
How do they make their homes nicer places to be? That's the first and foremost. How do we make our homes nicer places to be? And then all of the benefits that come from that as well.
I won't go into what America is doing at the moment, which is the complete U-turn on all of this stuff.
Yeah.
But that doesn't excuse us, I think, from still having to do our bit. There's never been an excuse for, they're not doing it, so why should we bother? I think it becomes even more incumbent on us to do what we can.
I think, and also sometimes the green debate gets a bit lost on, you have to be incredibly altruistic and evangelistic in order to want to do these things. The reality is, it's just nicer to live in a thermally efficient home. I've said just off camera before we started, I'm in the middle of a house move, and in the small gap, I've rented somewhere to reside in. My bathroom window doesn't shut properly every morning when I go. It's freezing in there. When was it built? When was my house born? 1830s house. Yeah. It's incredibly inefficient. LPG tank, incredibly inefficient. All the double glazing needs replacing. And it's just not... I moved out of a new building into that, and you so notice the difference in just the comfort of life. The washing takes forever to dry. Even when it does, there's little damp patches. Everything is just harder. So we do need to be really careful when we just talk about the argument around green, that we're taking everyone on that journey and making sure whether it is, like I alluded to earlier, whether it is just a bit of draft excluder to make your home more comfortable, or whether it is deep home retrofit, we're kind of catering to everyone, because it's a bit like eating organic, right? Caring about the planet is a luxury that can only be afforded to, and there's plenty of people out there that are wondering where their next food bill is going to come from, wondering how they're going to make ends meet at the end of the month, and we mustn't overlook them.
Yeah, wise words. And also for anyone watching, if you are looking at buying a property, or if you're looking at remortgaging, or if you're looking at any of those things, just check out what your energy performance certificate rating is. You can do it on a government website. I should have prepared. I can't remember what that website is.
We'll put it in the show notes.
But we can put it in the show notes. And it's really important, because you might actually get a cheaper mortgage rate as well. I've really enjoyed today.
So have I.
It goes very quickly, but I do have one last question for you. So, what is the best piece of advice you have been given on your journey or in life generally? And is there any final message you want to pass along to anyone watching this?
Yes. Okay. So, best piece of advice I was ever given is to always do what you say you're going to do, which sounds incredibly basic.
No, I like that.
But I actually think, you mentioned earlier, and I always feel incredibly uncomfortable and British about it, because I probably am the youngest distribution director in the country. I've realised that, I've worked hard and had great fortune in my career as well. But I really think, I don't think it's because I'm brighter than anyone else. I definitely don't think it's because I'm more articulate or anything else like that. I just think it's because if I say I'm going to do it, I always do. Always do. There's never any escape. And if I can't do it, I'll own it and say, can't do that in the time you say. So often does that come back to really, really serve me well. I've got one more, because I'm going to just extend it to two. My very first ever boss, Steve, who I'm still in touch with now, when I was advisor, told me that you'll go far in life if you are just 10% more enthusiastic than everyone else. And that's been the best advice I've ever had.
I love that. Yeah.
He said, just be fun to work with, and just be a bit more enthusiastic than everyone else, and you'll be fine. And it's been great. So thanks, Steve. I might send this to you afterwards. Thanks, Steve.
Well done, Steve.
And what was the last bit? My final.
Any final words you want to leave people with?
So, for consumers, for those listening in that are thinking mortgages seem really scary, hopefully not boring after listening to today, but they're really scary, get some advice, speak to an advisor, think holistically about your big long-term plans. You never walk into an estate agent and say, I want a mortgage. You walk into an estate agent and say, I want to buy that house. How do I make it happen? Think about your finances in the same way. What do you want to make happen? And then what finance do you need to back it up? Think about it that way around and build finances that really work for you. You don't have to be a slave to your mortgage. It should be working for you.
That's sort of a mic drop moment. I love that. That's brilliant. Thank you very much, Rachel. Thank you for joining me on the Coreco Couch. I've really enjoyed that, and I'm sure you guys have as well. Join me next time to see who is going to be sitting on the Coreco Couch next time. Thank you for watching.